Hello there, this is fairbinaryoptions.com. For today's analysis, we'd like to take a look at one cross. This is the cross, this is the Euro Great Britain Pound cross. A vicious cross because it squeezed both the bulls and the bears in a classical contracting triangle that acted as a continuation pattern. What does it mean in terms of Elliott waves? It means that we form, or the market is forming, either a fourth wave or a zigzag. Now, because the time element for, let's say that this is a fourth wave, because the time element here is actually too big, so the triangle actually takes too long when compared with the impulsive move prior to it, I would say it is not a fourth wave, but it is a zigzag, and this would be the B wave. In a zigzag or in a triangle as a continuation pattern, you have a five-way structure to the downside, then a contracting triangle A, B, C, D, E that should end above the highs in previous wave A, and then another move to the downside that should be equal in time and to travel either below 61.8 or more than 61.8 or more than 161.8 when compared with the previous wave A. I would say that is going to travel more than 61.8, and our impulsive move starts from this moment of time to the downside. It goes with the five-way structure in the following manner. This is the first wave, then the first correction, the X wave, this will be the second wave, the third wave all the way down here, the fourth and the fifth. So this would be an impulsive move with the fifth wave failure. This should be labeled as wave A of a, like this, of this degree, and then the B wave to the upside, or the B wave of the zigzag, should be here, and this should be the let's say the end of this contracting triangle, should be the end of the B wave out of this degree. So normally now we should expect a C wave to the downside that should go more than 161.8 when compared with previous wave A. Why? Because this is the classical arrangement for a zigzag. This is the classical distance that a zigzag should travel, and I'm talking about 61.8, and this 61.8 should go from the moment that the triangle is completed. I would say the triangle is completed at the B wave there and at the 0.811, and that means we should look for 0.77 to come. Now the market is in the 0.79. So whenever you have such a situation, what to do then? Buying put options or looking to buy put options. Now if you put this into perspective and you look at the economic calendar for next week, and you see that the CPI or inflation is going to be released on Friday, then normally that would be the main event of the week, and it should mean that the Euro Great Britain Pound, Euro US Dollar, and why not the Euro Japanese Yen as well, are preparing for that event. So looking to buy put options with end of week expiration date by the time markets are opening on Monday. Thank you very much for being here. This is fairbinaryoptions.com, a zigzag for Euro Great Britain Pound that calls for way lower levels, so put options recommended. Bye bye.